Talking about earnings, also RBL clocked in a robust set of numbers for the quarter gone by thanks to the higher net interest income. Our reporter Ishita Guha caught up with Vishwavir Ahuja. Let's listen in.
We are going to continue to stick with our FY20 guidance of maintaining a growth rate in the 30 to 35% range. And in some quarters, we tend to end up at the upper end or slightly better than the upper end of the range. And all I will say at this stage is that we hope to maintain this growth momentum, both in terms of the balance sheet growth and in terms of our profit growth going forward.
All right. Sir, in terms of your provision coverage ratio, we saw that there has been a substantial jump, almost an 8% jump in the provision coverage ratio. So are you comfortable at this level, or do you plan to increase it further?
So I think first objective always was to bring it to a level which is credible, and at the same time which is credible and safe. So I think we brought it to that level. This was a very important objective of the bank through this year, that the earnings momentum that we have, we should make sure that we are well cushioned, as far as the future impact is concerned, if there's an event risk or other things happen. So like we saw, Demon, and we saw some other developments in the environment. So I think fortunately in the corporate space, we did not see any negative surprises as far as our bank is concerned, whereas the industry, experienced that in a big way. So all I'm saying is that there are certain prudential levels. A prudential level of where we are right now is a comfortable level, but it shall be the endeavor of the bank to improve it slightly from here also as we go forward.
All right. Also, earlier you mentioned that your advances and deposits grew on the upper end of your guidance.
Yes.
So what is your guidance going ahead for the year that we are in right now?
So from a advances and deposits perspective, 30 to 35% is the range. We intend to stick with that, in a sense, for not just the foreseeable future, but even, from a further forward-looking perspective. That's the way we see life.
All right. As far as your fundraising is concerned, you mentioned that you have already gotten approval for raising fund worth 3,500 crore. That is for capital tier 1 equity. So where all will you be deploying this fundraising? Could you give us some sense on that?
So this is an enabling sort of approval we have taken from the board at this stage. It will have to go through the motions of, we'll take it to the AGM, and then we will sort of sit and plan the exact quantum, timing, etc. And, and what kind of tier 1 capital, preferential, QIP, whatever. All those things will happen over the next several months in terms of our thought process and planning. Having said that, it's going to be growth capital. It is very much for our organic growth needs, which I have said time and again, we are consuming high levels of capital already. We have consumed almost 40 basis points every quarter. So that's a significant amount of capital consumption at the level of growth that we are, experiencing, and it's for that.
All right. Also, you said that corporate lending is one space that you are looking at now, and there has been some deeper penetration into the sector. So what is your outlook as far as corporate lending is concerned, and have you thought about the structure in which you want to go about corporate lending?
So we have a large corporate segment, and then we have a mid-corporate SME segment. These are the sort of the components of our wholesale banking or lending strategy. And the large corporate space, post all that has happened in our country in the last 2, 3, 4 months, is looking more attractive. Largely because I think as a bank, we have now reached a size, scale, reputational capital, credibility in terms of our products and services. A whole bouquet is now available with the bank. We are full service, whether it's trade finance, foreign exchange, advisory services, debt capital markets, other than the lending of the balance sheet, cash management, everything we can do. So what is happening is that our relevance with the larger corporates and our ability to take larger share with them has gone up significantly in the last few years, and particularly at this time when some banks faced difficulties. It was also a time when sort of we stood strong. And I think it has improved our credibility with the larger companies in the country, which are credible borrowers. So that is what is giving us the additional confidence.
Correct.
That our ability to grow faster in this space is now sort of there. And we saw that in the last several months, where earlier the level of push we had to make to either break in or deepen our relationship with the better names, that has become now a very interesting two-way process, where there's equal inclination, even on the other side, to bring a bank like RBL Bank into their banking fold. So that is what gives us, a fair degree of excitement and satisfaction.
So just to follow up on that, you said that faster growth is what you're looking at, but faster growth will also expose you to greater risk, and especially in corporate lending. So aren't you wary of those risks that would come along?
No, actually we are, if you see in the last 8 years, our asset quality in this space has been impeccable.
All right.